The Canadian dollar further weakened on Thursday as falling energy commodities continue to weigh on the loonie. It has been relatively quiet on the data front, with the loonie finding direction on crude oil trends and the performance south of the border. After becoming one of the top-performing currencies so far this year, the Canadian dollar has pared a lot of its gains against the greenback. Following Wednesday's significant rebound, energy prices slumped once again amid worries about Europe's progress on the coronavirus and vaccine fronts. April West Texas Intermediate, WTI, crude oil futures plummeted $2.86, or 4.67%, to $58.32 per barrel at 19:26 Greenwich Mean Time on Thursday on the New York Mercantile Exchange. April natural gas futures rallied $0.051, or 1.99%, to $2.619 per million British thermal units, BTU. It has been a rough month for oil and natural gas prices, sliding 8% and 7%, respectively, in March. Since Canada maintains a current account deficit, the national economy relies on exports for growth. Oil and gas remain the country's biggest shipments, so any price can impact the currency and the broader economy. This week, the Bank of Canada, BOC, generated international headlines when it announced that it would slow its bond buying program ahead of its G7 peers. The central bank confirmed that it would begin removing emergency liquidity programs as of May 10, adding that it would not extend 3 other programs in the coming weeks to acquire commercial paper, provincial bonds, and corporate bonds. We can take these steps because now there is ample system-wide liquidity for financial institutions to draw from. When we start gradually dialing back the amount of incremental QE stimulus that we are adding, we will eventually get down to a pace of QE per passes that maintains, but not longer increases, the amount of stimulus being provided. On the data front, manufacturing sales slid 1% in February, down from the 3.1% gain in January, according to Statistics Canada. The Canadian bond market has declined on the news, with the benchmark 10-year bond falling 0.019% to 1.456%. The 1-year bill shed 0.01% to 0.145%, while the 30-year bond drove PPED 0.014% to 1.908%. The USD-CAD currency pair rose 0.29% to 1.2620, from an opening of 1.2581, at 1932 Greenwich Mean Time on Thursday. The EUR-CAD tumbled 0.09% to 1.4851, from an opening of 1.4858,